Imagine this. You finally decide to start investing. You open your investment app, and immediately you're faced with two options: index funds or ETFs. They both seem to do the same thing. They both promise long-term growth. So, which one should you choose? Choosing the wrong one could cost you money in fees, flexibility, or convenience. In this video, I'll explain the different simple language, compare their pros and cons is right for you. Let's get started. Successful investors don't spend their time trying to pick the next Apple or Nvidia. Instead, they invest in the entire market, choose index funds and exchange-traded funds, or ETFs. Both are excellent investment options, but they work differently. By the end of this video, you'll know what an index fund is, what an ETF is, the key differences, and which one is best for beginners. An index fund is a type of mutual fund that tracks a specific market index. The S&P 500 index includes around 500 of the largest publicly traded companies in the United States. When you invest in an S&P 500 index fund, you're buying a small piece of hundreds of companies at once. That includes companies like Apple, Microsoft, Amazon's, and Meta, Alphabet. Instead of betting on one company, you're investing in the overall market. This helps reduce risk through diversification. What is an ETF? Company also tracks an index, sector, or investment theme. The biggest difference? An ETF trades on the stock exchange, just like a regular stock. That means you can buy or sell it throughout the trading day. For example, an ETF tracking the S&P gives you exposure to the same companies as many S&P 500 index funds. The main difference is how it's bought and sold. For example, index funds versus the S&P, index funds versus ETFs. Let's compare them. Let's start with trading. Index funds are only bought or sold once each trading day after the market closes, but ETFs can be bought and sold anytime during market hours. The winner? ETFs. Second is minimum investment. Some index funds require a minimum investment. For example, $500, $1,000, or even more. On the other hand, many ETFs let you buy a single share, or even a fraction of one if your brokerage supports it. The winner? ETFs. Third is fees. Both index funds and ETFs usually have very low fees. However, some ETFs may have slightly lower expense ratios. But for most long-term investors, the difference is often very small. Winner? However, some ETFs may have slightly lower expense ratio. And finally, simplicity. Index funds are incredibly simple. You invest regularly, you hold for years. There's no temptation to trade every day. The winner? Index funds. And flexibility. ETFs offer more flexibility because they trade throughout the day. Index funds are designed more for long-term investing. Winner? ETFs. Which one builds more wealth? Here's something many beginners don't realize. If an index fund and an ETF track the same index, such as the S&P 500, their long-term performance is usually very similar before fees. What matters most isn't whether you choose an index fund or an ETF. It's investing consistently, keeping costs low, staying invested for the long term. Trying to switch constantly between investments is usually less important than simply sticking with a disciplined plan. Which one should you choose? Choose an index fund if you prefer a simple, hands-off style. You invest automatically every month. You're focused on long-term wealth building. Choose an ETF if you want day trading flexibility, you want more investment choices, and your brokerage offers free trading, along with fractional shares. Neither option is universally better. The best choice depends on your investing style and the features available through your brokerage. Avoid these mistakes. Mistake number 1, buying investments just because they are popular. Always understand what you are investing in. Mistake number 2, checking your portfolio every day. Real wealth takes time to build. Remember, long-term investing is a marathon. It's not a sprint. Mistake number 3, trying to beat the market every month. Many experienced investors simply aim to match the market through diversified funds. Index funds and ETFs are two of the best tools available for long-term investors. They offer instant diversification, low costs, and long-term growth potential. The most important decision isn't choosing between the two. It's making the decision to start investing and staying consistent over time. Your future wealth depends more on your investing habits than on finding the perfect investment. If this video helped you understand the difference between index funds and ETFs, don't forget to like, subscribe, and turn on notifications for more beginner-friendly investing videos. Now tell me in the comments, if you were starting today, would you choose an index fund or an ETF, and why? Thanks for watching, and I'll see you in the next video.